Well, global markets are in the midst of an everything rally, with just about everything reaching an all-time high price. So hi there everyone, welcome to the Traders Circle Weekly Market Update. It is Tuesday the 15th of July, 2025, and before I start, you do need to be aware that whatever I say is general advice only. I guess the big economic news at the moment continues to be Trump's tariffs. Will he increase them? Who will he increase them against? What will he increase them against? What will they go up to? No one knows, not even Trump himself. We did see a little bit of selling in US markets on Friday and indeed on Monday morning after Trump basically announced he was considering increasing his tariffs against Canada, increasing his tariffs against the European Union, and perhaps even increasing his minimum 10% tariff rate against every country. So US shares were set to open lower overnight, but then it came out that Trump might sort of come to some sort of agreement with the Eurozone, and so US shares went back up. No one really knows, least of which Trump himself, what he's going to do on tariffs, whether any deals will be signed. I mentioned it last week, and I'll reiterate it here again. Trade deals aren't something that you can just meet, today and sign tomorrow. They're actually extremely complex agreements, and historically they've taken many months, 6 to 12 months, sometimes longer to negotiate. And I don't know if Trump or the market or what seems to think that these are things that can just be agreed upon, on a day-by-day basis when they just simply aren't. What we have seen announced are deal frameworks, and again only with the United Kingdom. Um, and maybe that's enough for the market. Probably is enough for the market because it is so bullish. Any sort of cent or whiff of a deal is probably enough to send prices higher. For now, it looks like markets will ignore negative stories on tariffs. They don't really believe Trump's going to, increase tariffs or bring about greater tariffs or anything like that. Um, they think he's going to capitulate. They think he's going to bend the knee to whatever trading partner he's dealing with at that time. So the tariff situation for the moment only positive. It could become a bit of a negative if it starts to show up in the economic data. And we will see some economic data tonight, some very important inflation data from the US. It is expected to show US consumer prices, inflation start to tick back up. And that's one of the reasons why the US Federal Reserve hasn't been continuing to cut interest rates, is that they're worried that inflation is going to start getting stronger again. So, like I said, tonight's data, U.S. inflation, it is expected to start ticking back up. Most likely, that'll be put down to some of the tariff price increases, which we're only just starting to see the effects of. But I think probably a greater story here that is more of uh, a background story is just the absurd levels of US government money printing. Literally absurd. Probably greater deficits or greater rate of debt increasing than they had during say World War II, their greatest period ever. Um, that's primarily the reason that global assets have risen so much in price, is because the US government is printing absurd amounts of money. Not just the US government, but they're the biggest culprits of it. Um, it's 7% of GDP. It's going to grow further. What that means is if they were to run a balanced budget, as we talk about here in Australia, it'd be, essentially Great Depression levels of negative economic growth for the US. That's what's pushing prices up to all-time highs. It's just that they're printing so much money. So in some ways, you could look at it and say prices aren't actually rising. It's just that they're making money worthless. That the money that's sitting in your bank account, in your wallet, it's becoming worth less and less because they are diluting it with so much additional money. Um, it's absurd what they're doing. Uh, how long they'll get away with it for who knows, but it honestly can't continue like this. We're already starting to see signs of cracking in the bond market, and maybe we'll start to see consumer prices lift as well. I guess the one saving grace for consumer prices is that wealth inequality is also really bad. So where they are printing huge amounts of money, it's not flowing through to everyone. If it was flowing through to everyone, that would push consumer prices higher. But because it's concentrated in the very wealthiest individuals, all this money printing, it's not necessarily flowing through to increased consumer prices. But definitely something that we'll have to sort of keep an eye on. The big ugly bill that Trump passed is only going to worsen the situation, and that does mean that we're probably going to see prices continue to rally. And yeah, the sort of theme for this week is the everything rally. We saw Bitcoin hit an all-time high or exceed, set a new fresh all-time high. US share indices are at all-time highs. The Australian share market closed at its highest ever level today. European markets are at all-time highs. Um, many risk asset prices are at all-time highs, if not most. And it is purely a factor of money printing and, like I said before, that money going to the very wealthiest individuals as opposed to, I guess, a more equal distribution of that money printing, which could push up consumer prices. If there was a bit more of an equal distribution of that money printing, we would also probably see a bit better company reporting. So we're about to go into a company earnings season for Australia in a couple of weeks' time. And really, our companies aren't earning any more than they did 3 years ago. So I will do a bit more in-depth analysis on that in the coming weeks. But yeah, our companies on average are earning about what they did 3 years ago, yet our share prices are substantially higher than back then. And like I said, if it was a more equal distribution of that money printing, we probably would see these companies reporting better earnings, better results. Instead, their earnings and results are flat, but their share prices, their values are increasing. Are their values increasing, or is the value of money simply going down? So let's have a quick look at the charts for this week, guys, and we can have a look at the XJO. It closes at its highest ever level today. We have been higher intraday, right at the start of mid-June there. We quickly pulled back. There's a bit of worries around Israel and Iran there, and we found some support, let's say at roughly 8,500. We've got this resistance here, the all-time high at roughly 8,630. Overall, we are still in a very tight sideways range. We're looking for a clear break of this resistance. If we close any higher tomorrow, I'd suggest that we are breaking it, and that would indicate further upwards movement. Whether or not we do break that will come down to the US response to the inflation data tonight. And yeah, if they have a positive response to the inflation data, we should break through that level. And I suspect we'll be heading towards 8,700. All our previous highs have been roughly 100 points beyond the highs before that. So, 8,500 here, we went to 8,600. Roughly 8,400 here, we went to 8,500. So that could indicate that we're going to go to 8,700 if we break any higher. If we have a quick look at the US chart for this week, and they're also at their all-time high resistance at roughly 6,300 index points. They've stalled out at this level for the past week, but they might simply be finding this uptrend line. So they're inside a big ascending triangle. They've got that 6,300 resistance level. They've got that uptrend line. If they break lower, we're looking for a move back towards about 6,150. Could be anywhere from 6,130 to 6,160, let's say. If they break higher and hold that uptrend, break above 6,300, very hard to say where they'll go. But markets tend to like round numbers. Could be 6,400, could be 6,350. We'll have to wait and see. So I will wrap it up there for this week, guys. We're waiting for the inflation data. Markets are right at breaking point. Will they break higher on the data? Will they break back down? We'll probably know tomorrow. And then you'll get the update from me next week. So hopefully you enjoyed the video. If you did, click like, click subscribe, and we'll see you guys next time.